Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about probably one of your all's favorite topics out there, which is ARK Invest. And if you're not familiar with ARK Invest, they're basically an investment manager with a bunch of really intelligent analysts that have a primary focus on disruptive innovation. And Cathie Wood and Tasha Keeney from ARK Invest have been major Tesla bulls before it was even popular to believe in Tesla, or at least before it was as popular as it is right now. And some of their claims in the past on Tesla have been seen as very bold, but they've gained a lot of credibility over time because a lot of the things that they have stated have come true and seem on track to be coming true in the future as well. And Cathie Wood has gone on finance television networks like CNBC and others, and there have been some times in the past where she stated some things that at that point in time were bold for what she was stating, and there's been some times where she's basically been laughed at and criticized on live TV, but she stands her ground, and I have a lot of respect for people like that, and especially given the fact that Cathie Wood and Tasha Keeney, even though they are bold in what they believe in, rightfully so in my opinion, but the great thing about them is that they can go on TV, lay out their explanation, lay out what they believe in, and provide evidence for that and research for that, and it actually makes it pretty difficult for some of these finance television hosts to dispute some of their claims because they're backing it with research and evidence and logic and intelligence, and that's what I really have a lot of respect for, and they certainly deserve a lot of credibility. I don't know about you all, but for me, Cathie Wood and Tasha Keeney are up there with some of the legends like Warren Buffett. But continuing on to the main topic of this video, we're going to be addressing a recent article that Tasha Keeney posted on the ARK Invest website, and we're going to break it down a little bit and discuss some of the major points mentioned in this article. And this article is all about how Tesla can take advantage of a vertical integration strategy that will benefit their Robotaxi autonomy business in the future, and a lot of interesting insight comes from this article. So as always, of course, if you enjoy the Tesla videos and the ARK Invest content, please make sure to smash that like button. But just to take a look at Tesla stock before we get into this article, we are currently at a share price of $575.50, and for today's movement in the normal market hours, we had a plus 3.02% gain, that is plus $17.16, and then in the after hours, we are at a minus 1.58% drop, which is minus $9.26. So with that being out of the way, let's go ahead and take a look at this article by Tasha Keeney. As you can see, this is an article on the official ARK Invest website, and the title states, Tesla should launch a human-driven ride-hail service to accelerate its autonomous strategy. And once again, this is by Tasha Keeney, CFA analyst, and this was posted today as I'm recording on December 1st. Basically, anytime that I see new discussion from the ARK Invest team, and especially Cathie Wood and Tasha Keeney and Sam Kors, it's always something to pay attention to because, like I stated, these analysts have a lot of credibility, and in my opinion, they have much more credibility than your typical legacy analysts that don't have a team of multiple different people from different areas working together on price targets like ARK Invest does. So to get right into this, the article begins by stating, ARK previously detailed the tactical advantages Tesla would enjoy if it were to launch a vertically integrated ride-hail service. Here, we detail the strategic logic of Tesla launching that service. ARK believes that vertical integration through a ride-hail network would de-risk Tesla's financial model, lay the operational foundation for its Robotaxi network, and increase the odds that its Robotaxi initiative will succeed. It continues by stating, ARK believes that a ride-hail network will enhance Tesla's profitability prior to launch of a Robotaxi service. Moreover, it seems that the launch of a Robotaxi service would not tie up significant engineering resources except for routing, payment integration, and other functions that would be critical to the launch of Robotaxis. Finally, a vertically integrated ride-hail service with highly utilized electric vehicles would increase the share of miles driven on electric platforms, advancing Tesla's mission of converting the world to sustainable energy. So just to break down a few things mentioned towards the beginning of this article, as it states, it will lay the foundation for the Robotaxi network, and this is a great point in general because if you think about the fact that this could help get people more familiarized with Tesla actually having a ride-hailing service, then once they do finally transition to Robotaxis and autonomy, for one thing, you would have customers that will likely already be loyal to Tesla as a ride-hailing service. For one thing, you're going to have a lot of people that will simply prefer to ride in a Tesla, whether that's to support sustainable energy or if they simply enjoy the experience of riding in a Tesla over an ICE vehicle. And if I think about that myself, if the prices were similar to riding in ICE vehicles like with Uber or Lyft, I would just simply much prefer riding in a Tesla. And this is another opportunity that could be a convincing factor for those kind of on the fence about Teslas. It would basically give those out there a free test drive of a Tesla, and you would have what many call the Tesla effect, which is basically you hear a lot of criticism of Teslas from people that have never ridden in one. But once you finally give them that experience, then their mind may be changed drastically from that experience, and because of all of the different benefits of riding and driving in a Tesla. And another thing that this mentions here as well is that it will enhance Tesla's profitability prior to the launch of a robotaxi service. And this is actually a great point as well, because I recently saw an article by Electric that covered the email that was sent out by Elon Musk talking about how they need to increase profitability and affordability, and how they need to make their pennies go that much further in terms of cost efficiency. The next section includes the header "De-risk the financial model," and this continues by stating, while the launch of a commercial robotaxi business would transform Tesla's profitability radically, its technical feasibility is somewhat uncertain. ARK previously detailed how a robotaxi service could increase Tesla's valuation by 10 times, though in our published base case valuation, we assigned it only a 30% probability to its success. Pursuing a vertically integrated ride-hail service, Tesla could unlock the benefits of a robotaxi-like financial model and at the same time lower considerably the technical risk of launching a robotaxi network. For the first 3 million cars sold into the ride-hail channel, ARK believes that Tesla would generate net profits per mile close to that of an autonomous robotaxi service. As shown below, a vertically integrated ride-hail service priced in line with existing services like Uber and Lyft should generate 28 cents of profit per mile. While ARK expects the price per mile of a robotaxi network to decline over time without the expense of human drivers and with the increased convenience and value profile for customers, its profitability still should be similar to that of ride-hail services as shown below. And then it includes a chart right here titled "Ride-hail versus Robotaxi Profitability per Mile Example Assuming 3 million Vehicles on the Network." And for here it says ride-hail and it says price per mile $1.85, profit is 28 cents, and then for autonomous ride-hail it says price per mile $1 and then profit 25 cents. It then continues with this topic stating, according to ARK's research, while the addressable market of a robotaxi network is 100 times larger than that of a ride-hail service, Tesla would generate recurring profitability earlier and more predictably were it to launch both services. ARK's modeling suggests that in 2025, ride-hail could increase Tesla's recurring operating earnings by over $30 billion, bolstering its valuation relative to that for its standalone EV business. If Tesla were to decide against the commercial launch of robotaxis, then a ride-hail service alone could improve its profitability and ultimately account for roughly 30% of the company's enterprise value by ARK's estimates. So here this basically discusses a tremendous benefit to going ahead and launching this ride-hailing service. And even though Tesla is pretty busy with having their hands in multiple different pies right now, as Tasha Keeney states, this would certainly be to the benefit of Tesla because of this massive amount of vertical integration in multiple different layers. So not only does Tesla have the most valuable EVs in the sense that you're getting the most value out of the product that you're paying for, at least that's an opinion by me. In addition to that comes along a lot of the vertical integration that comes with Teslas that not only saves expenses in the actual production of the vehicle, but you would be adding that one extra layer with a ride-hailing service where, given all of these factors of vertical integration combined together, it seems that it would be very difficult for other ride-hailing services to compete when they're producing their own vehicles. Therefore, that in itself means their costs are at the absolute bare minimum possible because of this maximum level of vertical integration that would not be available to all of these other ride-hailing services out there. They could basically use these vehicles as part of their ride-hailing service at the exact price that it costs to make them, and then use that as a business expense as well. The next section of this article states, lay the operational foundation for the robotaxi network, and it continues by stating, the operational requirements for vertically integrated ride-hail services are similar to those for commercial robotaxi systems as shown below. To commercialize its robotaxi network, Tesla will have to integrate payments, develop routing and matching algorithms for riders and drivers, recruit and train vehicle owners to join the platform, concentrate fleet assets in target markets, and attract prospective riders. Each of those capabilities would be necessary to support a ride-hail service as well, so why would Tesla wait until full self-driving software to develop them? Then it includes another chart titled 2 Possible Paths to a Robotaxi Network. The first is vertically integrated ride-hail first. This says could launch today, payment integration, routing matching algorithms, driver recruitment and training, rider recruitment / acquisition, and then launch. And then it says transition to robotaxi platform. And then the second one says Robotaxi network only, not until perfect Robotaxi software is ready, maybe 2021, perfect Robotaxi software, payment integration, routing/matching algorithms, asset owner recruitment training, rider recruitment acquisition, and then launch. So this actually lays out a pretty reasonable viewpoint in the sense that Tesla could wait until the robotaxis and the full self-driving software is perfect, but when you can already lay the groundwork for this future business model and be in an advantageous position to do so, it just makes complete sense. I completely agree with Tasha Keeney, and I think we even got a response from Elon Musk about this topic over a human ride-hailing service just recently, and it seems like it was kind of brushed to the side a little bit, but I actually think this would be a genius idea, and Tasha Keeney is really backing up this point with a lot of logic and reasoning for it. It then continues by stating, not all preparation for a vertically integrated ride-hail service would add value to Tesla's robotaxi initiative. Notably, Tesla would have to develop sales and recruitment strategies for a ride-hail service on a city-by-city basis. Though it could attract drivers to its platform, the startup costs probably would exceed those of launching a robotaxi service. That said, while drivers would be committing to a platform aiming ultimately to disintermediate their driving services, they also would be investing in an asset, a vehicle, that would appreciate, in our view, meaningfully when converted to a robotaxi. Drivers would become vehicle operators with incentives to keep their vehicles clean, charged, and utilized. And also, just to address the point about how they would be working in a field that is eventually going to replace this job, for one thing, a ride-hailing service, I know for some people out there it may be a full-time job, but I think at this point in time, there would simply just be people that would be very satisfied and excited to have a temporary source of revenue. Even though it won't be permanent, it's still a great opportunity for those out there that would like the extra cash in the meantime. And I think there would be a lot of people that would be accepting of that fact and still satisfied with the fact that they would have some income in the meantime. And then there's another section that says increase the odds of robotaxi success. And this states, while Tesla could launch a ride-hail service on time, the robotaxi landscape is littered with missing timelines and false starts. Many auto manufacturers once expected to launch truly driverless capabilities by 2020, but not one delivered on time. Even Waymo, the Alphabet subsidiary, supposedly 2 months from commercial launch in November 2018, delayed its launch by roughly 2 years. Tesla has also slipped on its timeline, suggesting that the technical challenge associated with autonomous driving is daunting. That said, we believe Tesla does have a significant competitive advantage. It can source real-world driving data and deploy real-world tests of its autonomous system at scale. Tesla's fleet, all of the Model S's, 3s, X's, and Y's, equipped with autopilot on roads today, drives more miles in a day than Waymo's fleet does in a year. And this right here, that fact in itself, if you're not familiar with that statistic, that's pretty mind-blowing. And it's actually a great example of the competitive advantage that Tesla has when you really think about the fact that there's a lot of kind of Tesla skeptics out there that are saying Waymo has a much bigger advantage. And keep in mind, Tesla's full self-driving technology is a general solution in comparison to a lot of other autonomous services out there that are focused on more specific solutions like geofencing and other things that are kind of like what Elon Musk would call a waste of time, like LiDAR. It continues by stating, Tesla can collect more real-world examples of idiosyncratic faults or corner cases more quickly than can Waymo, and then can battle test solutions against real-world conditions across roughly 1 million vehicles. While ARK believes that Tesla already has access to more driving data than any company in the world, ride-hail miles could be even more valuable to Tesla as they could mimic the future trips taken in robotaxis. A ride-hail network would give Tesla significantly more data to train autopilot. Based on traditional car driving habits, ARK estimates that Tesla will have access to more than 40 million miles of driving data per day by the end of 2020. According to our estimates, ride-hail could boost its annual real-world driving data generation by roughly 70% by 2025, as shown below. And this has been a major point laid out by Tasha Keeney previously, and it just makes sense because if Tesla is going to eventually launch this ride-hailing service, what other way could they not only make money at the same time, but give themselves a much bigger competitive advantage than they already have at this moment in time? I think it would honestly be the perfect strategic play to make, even if they have to front up some costs in the meantime to make sure that this happens. I think the payoff in the long term will be tremendous, and it will only provide Tesla a much larger competitive advantage than they already have. And that's the thing right now. You have some people out there that are doubting Tesla's autonomous technology, and of course those that are Tesla bulls officials realize that Tesla is really the one in the advantageous position, but this would just push that even further by taking advantage of not only profits thanks to vertical integration and this new service, but it would also, as it states, increase the odds of Robotaxi success and propel this future business even further ahead of time. Here's another chart included that is titled Estimated Available Data Miles for Autopilot Training, and on the left here it says billions, and then below here it says 2025 annual miles. On the top it states additional miles from ride-hail vehicles, and on the bottom miles on Tesla vehicles with Autopilot version 2 or later. So this is a really tremendous amount of miles that could be added, and as we all know, with machine learning, more data is crucial. And if this could increase the amount of data for machine learning that much, then it would just add so much more to the business in terms of that competitive advantage. And then finally, to end the article, it states, as a result, Tesla will have access to more corner cases as it trains its autonomous neural nets, potentially solving for full autonomy sooner than would otherwise be the case. More real-world driving data also will be critical in convincing regulators that Tesla's autonomous system is safe. To demonstrate that the performance of its autonomous vehicles is statistically superior to that of human drivers, ARK believes that Tesla will have to provide regulators with billions of miles of data. Ride-hailing miles could shave months and perhaps years from the time and data collection necessary for regulatory approval. In the next year, given the number of Uber and Lyft drivers in need of work after the Rona juxtaposed against the increased consumer demand for transport options other than mass transit, a Tesla ride-hail network could be well timed. Today, approximately 13 million US gig workers are collecting unemployment benefits in the wake of the Rona, and subway usage is down nearly 70% in New York City. Ride-hailing also could provide free marketing focused on potential Tesla buyers, particularly in urban areas. Consequently, a ride-hail network could benefit not only Tesla's bottom line, but also serve public needs both during and after the Rona. So this kind of touches on what I mentioned at the beginning of this article as well, with that Tesla effect and possibly influencing new potential customers to eventually consider getting a Tesla thanks to that experience of riding in a Tesla as part of the ride-hailing service. So this would actually be a very bold strategic play for Tesla, in my opinion, in which you would have a tremendous amount of different advantages that would not only help Tesla's business, but propel its competitive advantage with autonomy even further. So that's pretty much the end of the article right there, but I just wanted to cover this as part of a video because I thought this was an excellent breakdown by Tasha Keeney and really laid out what could be a very strategic business plan for Tesla. And I definitely think that Tesla should take advantage of this because, as we know, autonomy could contribute trillions of dollars to Tesla's market cap, especially if they are the first to solve autonomy, and I think they will be, but I think the odds of that happening would increase even more if they were to launch a ride-hailing service. So I completely agree with Tasha Keeney, and I think this was an excellent breakdown of a possible strategic business move. Anyways, please make sure to smash that like button if you all enjoyed this video, and feel free to check out my referral links to Robinhood and Webull in the description. You can use my referral link to Robinhood and get a free stock, or you can get up to 4 free stocks in total with Webull, 2 for just signing up with my referral link. Those can be valued up to $250, and then another 2 valued up to $1,600 for depositing $100 into your Webull account. And I believe you can take that $100 right back out after you get your free stocks. That's what I did. So it's basically just nice passive income with minimal effort, and it helps support the channel as well, which I really appreciate. But anyways, I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.